Oil expenses upward thrust as tight supply. Geopolitical tensions linger. Melbourne oil fees climbed in Asia, buying and selling on Friday, rebounding from preceding declines on deliver tightness and geopolitical tensions, even though weakened demand in the United States has forged a shadow on the market this week. Brent crude futures rose $1.51, or 1.5%, to $105.37 a barrel via 0310 GMT, even as U.S. West Texas Intermediate WTI crude futures gained $1.34, or 1.4%, to $97.69 a barrel. Things are nevertheless poor on the monetary front, however. We're still in a structural shortfall for set-off oil, and which means bodily buyers will be there to guide dips, knowing the uncertainty of what lies in advance on the geopolitical front, stated Stephen Innes, dealing with accomplice at SPI Asset Management. Innes mentioned buyers had subsequent weeks' U.S. Federal Reserve choice on hobby costs firmly on their minds. Fed officials have indicated that the relevant bank might probably enhance rates by means of 75 basis factors at its July 26-27 meeting. While 75 is within the cards, steering might be vital, and any softening in the fee hike outlook could be excellent for worldwide boom, Innes introduced. While signs and symptoms of softening U.S. call for weighed on oil expenditures and dispatched benchmark contracts sliding round 3% inside the preceding session, tight global elements endured to maintain the market buoyed. Despite the pointy decline in oil expenditures, the outlook for the deliver issue remains intricate. Until demonstrated evidence for softened needs comes into sight, the Ukraine war intensified deliver scarcity will maintain the oil expenditures staying strong, stated Tina Teng, an analyst at CMC Markets. WTI has been pummeled during the last periods after statistics showed that U.S. gas call for had dropped nearly 8% from a year in advance within the midst of the height summer season riding season, hit by way of file expenses on the pump. In evaluation, symptoms of sturdy call for in Asia propped up the Brent benchmark, putting it en route for its first weekly benefit in 6 weeks. Demand in India for fuel and distillate fuels rose to record highs in June, no matter higher expenditures, with general subtle product consumption going for walks at 18% greater than a year in the past, and Indian refineries operating near their busiest tiers ever, RBC analysts stated. This indicators plenty greater than a robust recovery from COVID-plagued years, RBC analyst Michael Tran mentioned in a Be Aware.